Traders, welcome back to my YouTube channel. The volatility still remains very high. There's a lot of bars on the chart. You guys can see I'm zoomed out quite a bit and still a lot of price action. The volatility is slowing down. It's not as bad as we had last week, and the market will slow down and go back to its normal boring phase, which I kind of miss, to be honest. I like the slow, boring and predictable market because the bars are big, so the stop loss is large. And the setups just happen so quickly that a lot of times you cannot even manage to get the order in time, so you are filled. So it is quite a challenging market to trade, but we have to get the experience. And the way we approach the volatile market like this is, first, when you're trading more contracts, you're already a profitable trader. You want to scale down because you don't want to give back the money you earned during the normal market. And now just because the stop loss is bigger, you're going to lose twice as much. So that's really not the way to do it. Just scale down. Utilize the runners, let them run a little bit more than normal because you can really catch some decent moves. If you're trading regular ES1 contract, go on MES, go on micros, or go straight up to simulator, because it is not worth risking your hard-earned capital just so you hope to make some money. It is much better because you don't have enough practice with this. You practice 300 days, you trade on a slow normal markets, and now this fast volatile market will kick you straight into your face. You just don't have enough experience. So in order for you to get the experience, you go on a simulator for 1 or 2 weeks. The market will not go anywhere. Save your hard-earned capital, don't give it back because the stop loss is big. The bars are moving fast, so you may enter prematurely. You haven't, thought out the proper setup. So it is much better to stay on sim. You still want to practice. You want to learn this. You want to keep pulling the trigger. You want to keep testing your mind how you would react under the pressure. But it is better for time being to, sit on your hands, basically. Stay on the simulator and don't risk your iron capital. The market is slowing down. It will slow down. Today it was not that bad. When the stop loss is big, how do we do it when the signal bar is too big and we don't want to risk a lot of money? We don't have that many options. What we can do is first of all, we always have to put the stop loss below or above 1 tick, below or above the signal bar. Or if I go long right here, I have to put it 1 tick below here. I cannot put it in the middle because I will get stopped out on the noise, and that's what will frustrate you the most. Having a winning trade that lost just because you handled the trade poorly, all right? And remember, we have odds on our side, but we don't know which trade is going to work. If you take the trade that would have worked, but you handled it poorly and you got stopped out on the noise, then you are supposed to have a winner on paper, but you are, stuck here with the losing trade. So your already math is wrong, and that's really not how the trader's equation will work the best. All right, so use the limit orders. If the stop loss is big, use the limit orders. Put it way below so you get into your comfortable risk to reward ratio. You will miss a lot of setups, okay? And that's okay. I'm okay with this. I'm okay with missing a lot of setups during this area, during this time being before the market will slow down and the stop loss is going to be reasonable. That's just me. I like being patient and I don't mind missing a setup. But if you hate missing a setup, you probably have to use stop orders just to get in a few good trades because the market is going so fast. I'm not using stop orders even on a day like this. I'm afraid of the slippage. I still like using limit orders so my risk is smaller and my target profit is more reachable. All right. And when the market is volatile like this, I keep an eye on 2500 tick chart because it is much cleaner. It is simple. It get rid of a lot of these little fake outs and a lot of choppy areas. So I'm keeping an eye on 2500 tick chart. Today it wasn't as useful, but last week it was really useful. So the 2500 tick chart, I'm using that right now. If you want to make your stop loss smaller and you want to go on a lower time frame, understand this. There's going to be a little bit more fake outs than normal. So I don't recommend going, let's say, on 1000 tick chart. I don't think that's pretty much reasonable. At the same time, I don't think you want to go and go on a higher tick chart to limit the fake outs because the bars are just going to be way too big and the stop loss is going to be gigantic. All right, so you have to pretty much stick with this time frame or 2500, and that's the way to do it. All right, the last way we can do it is we can keep our stop loss quite normal. One tick below the signal bar are entry normal. What I mean by normal, not really trying to sneak back with the limiter, and we can increase our target profit. But since 10 ticks is already quite a big scalp, I wouldn't recommend going for 18 ticks, let's say, to offset, to have the 1-to-1 risk to reward ratio. You're already starting to get a little bit too comfortable with this, and you know, it's already starting to be quite a big scalp. So I don't really think that's smart. I would stick with the 10 tick, maximum 12 target profit. All right, so I would really prefer just sneaking back rather than increasing my target profit by that much. It can work, but I just haven't tested it out, so I have no results when it comes to that. But let's talk about the setups today, because today started as a clear trading range, move up, move down, move up. You guys can see I'm drawing these shortened trend lines because that's mostly my only tool that I have in trading ranges. I'm not going to draw wider patterns. Even today I had an option to draw a channel like this. I'm not drawing this because during this medium trading range I'm sticking with the short-term one. So I had a break, new extreme of the shortened downtrend, so the sellers are no longer in control, and I had a strong push of the bullish momentum indicating the buyers are in control. And there is a first high probability setup, new high, first entry long, second entry long is a two-legged pullback, downtrend played out with the break and a new low, attempt to create new low because EMA cannot let price close below, and a nice second entry long. All right, from that point on, we're coming from a failed breakout, so we're expecting for price to generate strong momentum to get to the other side. This is how healthy trading range works, from the down, up, down, up. All right, there is a failed breakout, but since the momentum was so strong, I haven't really marked it, and it feels a little bit like a top pick because we've been just chopping slowly higher and slowly higher. I don't really feel safe fading this breakout, even though you can make definitely a case for it. How do we know that after a new high is formed, the current uptrend played out? Well, simple. We observe the EMA. If EMA is going to hold price, then the trend may continue, but we pushed below EMA. Good indication that I'm ready to sell, and there's a new high, first entry long, second entry long, failure after this uptrend played out. This is a reversal pattern. This is a safe high probability setup. This is too big. I missed this entry right here. Unfortunately, market took off lower and lower. All right, so I'm drawing the shortened trend lines. I'm below EMA. I have a new low, first entry short, second entry short right here. And this was a tricky trade. I'm going to tell you why I skipped this trade right here. Mainly because of this big bullish bar. There's a first entry short that worked, and you're supposed to make a new low, and there's just gigantic big bullish rejection bar. Something is telling you that something is off, and a few other traders also had a little bit gut feeling about the signal bar and this big bullish bar. However, if you're a new trader and you took this second entry short here, you followed the rules, you took a chance here on a great entry, and this was just one of those losing trades that it just happens because you have one winning trade, second winning trade, and one losing trade. So nothing is perfect, but with enough experience, you can get a little bit clue why you want to skip this. And just this gigantic bullish bar really shouldn't have appeared after first entry short like this if the bearish momentum is strong. But if you took a chance here, fair enough. This is already indicating a little bit of a bullish imbalance, and I'm not going to show you this trend line because I wasn't looking for this trend line at the time yet. All I'm doing, I'm focusing on the shortened trend lines. I have a break, I have a new extreme. All right, and here what we talked about, I'm going to react, I'm going to see how EMA reacts, and EMA holds price, second entry long of EMA. But since I had a new extreme, I think it's better to wait, another push to a new extreme. And why am I not marking any shorts here? Because of the bullish imbalance. All right, we literally struggle to make it to the middle of the trading range. All right, every single time we push below, we instantly reverse higher, so I'm not really thinking about shorting. So we push lower, and we have a first entry short, push above EMA, second entry short, failure. The strong push above EMA already indicated that this is truly a bullish imbalance, and I'm not looking to sell. Once this bar formed, there was a nice big bullish bar, and I'm prepared to go long about this, but at the very end of the bar, it closed bearish, and the next bar in few seconds closed bullish. By that time I already scratched the idea to go long here, but you guys can see what kind of setups you're looking at. You're looking for the second entries with the trend or failed second entries that goes against the trend. All right, and even though you're going long directly into this key entry point, key level, it is a little bit riskier, but you have to understand that how we push strong above EMA is holding, it is worth the risk. It was a scalp that worked. Market push lower, indicating bearish momentum. We're pushing below EMA. First entry short, I'm not first entry long, failure, but it doesn't mean anything. I want to wait for safe reversal pattern. All right, and this is the second entry long that failed, and this is now a safe because once market tries to do something once, traders will attempt to do it again, and they tried it again and failed. That's a human psychology, and that's it's safe to go short. And you have a new low, first entry short, second entry short, big bearish bar. So you guys can see you have a new extreme and you have a push above the EMA, once again indicating the bullish imbalance because you made it only to the middle of the trading range. You're supposed to go from the very highs all the way down to these lows, and something is not right here. So this is how I know I'm not starting to short these breakouts. All right, I have a new low, first entry short, second entry short, failure, strong big bullish bar. You close one tick below, instant reverse. This happened so quickly that you had no chance getting in 10:28, 10:38. So 10 seconds and this bar already closed. So you got to like 1 or 2 seconds to enter. And I know this was unenterable when I was watching this live. All right. So you can see the bullish imbalance. You can see the market is pushing higher and you have to follow the short-term trend line. Let's take a look how big and steep move this was. And I want to take a second to talk about these steep moves. And it's quite similar to a steep move like this or the steep move like this on a 5-minute chart. Every time you see a big steep move up, even though it looks, you know, following the common sense like it's going to be a strong trend, steep moves are not that long-term sustainable and they will pull back soon. And this is extremely steep move and you're expecting it to pull back to the EMA, right? And same thing right here, this is extremely steep move. So once I have a break in a new extreme, I'm no longer looking for longs because I need to give room to the correction. I need to give room for people to take profits. So this is why I haven't marked any long here, even when I'm at the key entry point at the EMA, because this was such a steep move, a strong move, steep move, and we were going sideways. So we have a breakout above the trading range. So you really want to give it room. So I have a second entry long, but you're going long above the bearish bar far away from key entry point. So that's a no-no. Then you have a new high, first entry long, second entry long, but a lot of stims, a lot of congestions, a lot of bars going sideways. I don't really recommend taking anything here. You have a new high, first entry long, second entry long, failure. Finally, something close below EMA, but signal bar is not ideal. And this is where the market started to get really confusing. I took a losing trade right here on a second entry short. And the mistake was I went short after such a strong, steep, sharp move down, going short directly after basically the move played out. All right, so it barely didn't make the scalp, but that's okay. I think this is a decent entry to take a chance, but you know, the market already made its strong move and I'm supposed to give market a little bit breather. But once again, you want to take a short right here off this key entry point, but the bar is unenterable. So that, you know, that was a lot of times what today happened because the bars are so big. So you have to stay away from the winning trades because the bar is too big. And a lot of times you miss a trade. But take a look how EMA is getting flat and you're starting to chop around up and down, up and down. All right. There's this uptrend, which was confirmed by this move right here. So you can see there's a little bit bullish bias, but you can clearly see that this is a trading range and you need to switch to trading range rules. So you have to draw these shortened trend lines that you have on the chart and you have to avoid trading in the middle because this is getting quite tight. To be honest with you, I don't see any reasonable setup in this mess. EMA is flat, a lot of congestions. Once again, congestion here, a lot of overlapping bars just going sideways, a lot of these fake out areas, but you can get rid of using 2500 chart, hopefully. Just follow the short-term trend lines. The best thing to do here is just to stay patient and avoid trading in these areas. You finally confirmed the bigger pattern, but whoops, you have you have horrible signal bars right here. You don't have good signal bars to sell. You have a higher low, but you're going long directly at the very high of the move. so far from EMA from the close, so this is not good. And then you have a big bearish move down and you have a first entry short, second entry short. But I don't like taking this because EMA is supposed to hold price. If I'm going to take a reversal pattern, I want to see EMA hold price. The same thing I did in market this setup. First entry short, second entry short. EMA is supposed to hold price and they're supposed to be, you know, close above the EMA. Not that we have a big bearish bar and big move down, the close is below, already indicating that something is a little bit off here. But you guys can see now you're in the middle of trading range. Now you're quite in the middle and you know, bunch of congestions. There's actually a first entry long, second entry long, which confirmed the support and the trend line, which is the important key level. But once again, let me measure this. 6-point stop loss. So this is unenterable. Again, I'm just going to mark it as an example, entry educational, but because the boss is quite bullish, this is a trading range, so buying is more important than selling. But you know, this is unenterable. You have a new high, first entry long, second entry long, which once again, first break of this overall uptrend. You're waiting for price to create a new extreme and the support keeps holding. This is a second entry, it is a small bar, allows you to get filled with the limit order. So this is finally a small decent bar. I think this is a decent entry even if you have the shortened trend line, because you're at the bottom of trading range and you want to buy low and you want to sell high. So this was quite a decent entry. I already talked about why I don't like taking this reversal pattern. This was the trade that I took, and looking back, I got a little bit lucky because I looked at it as a break new extreme of the uptrend, as a two-legged move that played out. Once again, stop loss is fairly decent, allows me to risk a small amount of money. I treated it as you already made a new extreme, and what I basically liked is we've been working sideways for such a long time. This is such a long trading range that I really thought we were going to pull back lower, and looking back, I got a little bit lucky. Once EMA is holding prices, you would be normally expecting push below EMA, lower high, fell second entry long, and pushing lower. Once EMA proves that EMA is holding prices, I'm no longer looking to sell another additional failed breakout because it confirms the uptrend. We're not pushing below EMA, and finally the uptrend resume. And this is what, you know, why you need to stay patient during these consolidation areas, because market will resume, the trend will reveal itself, and there's going to be a clear setup. So you have to stay patient during these consolidating areas. And you have first two swings that set up the trend line, and a third swing confirming it on a second entry long. EMA is now pointing higher. You have this uptrend. So you're basically just, if you want to have the highest odds of succeeding, you wait for price to come to your key entry point, second entry long right here, but the bar is too big. You have a break and a new low to key entry point, two key entry points are holding, and then you have an overshoot, and you're starting to, this is starting to be one of those steep moves, and you're already going long after all this move happened. So even though you have a break and a new attempt to create a new low, I don't like going long here. You had a higher low which confirmed the trend line again and EMA. I think it's worth taking a shot here, even though the signal bar is horrible. It is aggressive entry because you have even the overshoot. But since you have two key entry points holding and you sneak in with the limiter, it is quite reasonable to take a chance here. But by that time, like I showed you on a 5-minute chart, it was a very steep move and you're about to pull back, even though according to common sense, you want to keep buying. But you need to understand it. You need to give room to market to correct. And the market just basically sold off strongly, pushing below EMA. And once the market is in this downtrend, I'm no longer looking in any on any longs. I'm just looking for second entry at key entry points. I have a new low, first entry short, I'm skipping this. New low, first entry short, I'm skipping this. Second entry short triggered about below bullish bar, so that's no entry. And I have first two swings and third confirmed the trend line. Nice bearish bar. And this is where all the magic happened. If I can use the first two swings like this, but you guys will see that if I draw it like this, I have a early break and a big move down and new lows. I keep making new lows, and this is such an unproportionate move that basically this trend line is not even valid. So this is why I decided to make it a little bit flatter like this and use this swing, because this makes much more sense. It's confirmed from the bottom. Price fits proportionately. I cannot have such an early break and such a big move down. That doesn't make sense. All right. And there's this move off the key entry point where all the magic happens. You have a multiple bottoms here, but I don't like going long because price has been trending below EMA the entire time. This is now a valid downtrend. If anything, you have a little bit sideways movement and you have a failed breakout and first break of this downtrend, and you're expecting for price to create a new extreme, which did happen, and this is a failed breakout below the consolidating area, which most breakouts will fail. And take a look what you have here. You have a second entry short off key entry point, and this is why you cannot blindly take these patterns. We are not pattern traders, we are price action traders, because first you have the short-term trend line in play, and second you have break and a new extreme. You can, and what a few traders do, and you used to do, you can make a case for making it a little bit flatter like this and say maybe this is valid and I can take this short off key entry point right here. But no, I've realized through experience that the first trend line you would see where you would be watching the market live, that's the most reliable one and that's the valid one. Because I used to make the mistake, I used to come in late and I used to already see a lot of these bunch of high probability setups at key entry points working, and I manufactured my trend line and make it a little bit flatter because I wanted to manifest the setups and I wanted to create a reason why I'm going to take these setups off key entry point. But what I used to do, I just used to ignore the break, and that's where the market is about to turn. All right, so always stick to the first one. You would see where you would be watching market live, and it's already too late. We are at the end of the day. All right, so hopefully the video was useful. Market is volatile, scale down, go on sim, use the limit orders so you decrease your risk. Even here when I'm watching this trend line, I'm not going to draw it like this, because if I draw it like this, I'm going to ignore the break and a new extreme. I'm still maybe looking for reasons to go long and I'm missing the short opportunities. Now when I'm watching this print live buy bar buyer, I'm going to do this because this third swing confirmed these first two swings. So this is how I'm going to do it. This is how I would be watching it when I'll be trading this live. I have a break and a new extreme. All right, so I'm going to wrap it up. I'm going to see you guys next time. Take care, buddy.